Let's kick off with our first session of the day. It's a regional corporate roundtable titled Opportunities Amid the Headwinds, featuring an eminent C-suite panel who will share hands-on experience of how they're navigating trade disruptions and rising operational costs to unlock growth. With that, I'd like to invite to stage esteemed panelists, Dr. Melvin Heng, Executive Director and Group CEO of Thomson Medical Group Limited, Vincent Lim, President Commissioner of PT FKS Food Sejahtera Tbk, Jessica Ng, CEO and Executive Director of EcoShop Marketing Berhad, as well as the esteemed moderator of the session, Michael O. Lau, CEO of Maybank Investment Banking Group. Round of applause for our wonderful speakers on stage today. Michael, the stage is yours.
Very good morning to all, and a warm welcome to the Invest ASEAN Malaysia Conference of 2025. This year's Invest ASEAN is truly special, as we have the privilege of organizing it as a joint conference with Bursa Malaysia's Invest Malaysia, in conjunction with Malaysia's chairmanship of ASEAN for 2025. We are extremely pleased to collaborate with Bursa Malaysia to bring you this special edition, and we thank Bursa for their partnership in delivering this joint conference. To kick off today's conference, I am honored to welcome Dr. Melvin Heng, Ms. Jessica Ng, and Vincent Lim to our regional corporate roundtable. Thank you so much for taking the time off from your busy schedule to share with us insights on your respective businesses. We are all looking forward to a very interesting discussion. Now, let me start off with a little bit of context setting. This decade has truly tested us. We started off with a pandemic, followed by supply chain challenges, and more recently, shifting trade policies brought on by fundamental shifts in US trade policies. This has culminated into the imposition of US import tariffs on its trading partners, with us in ASEAN not spared. Now, against such a backdrop, governments are renegotiating, recalibrating, and reprioritizing economic policies to navigate through the new realities of global trade. Meanwhile, businesses are taking a relook on their priorities and strategic direction for the near to longer term. Now, as often said, in the middle of every difficulty lies opportunity. And relating that to the businesses of today, there will be opportunities and tailwinds too, amid the current global economic headwinds. On that note, let's dive into today's discussion. Let's talk about headwinds, Dr. Melvin. Now, Dr. Melvin, Thomson Medical Group, or TMG, is one of the largest private providers of healthcare services for women and children in Singapore. The group has grown their presence to a very impressive 37 clinics and centers in Singapore today. In Malaysia, Thomson Medical operates a tertiary hospital in Kota Damansara, and also the industry-leading TMC Fertility Center. Now, meanwhile, we understand in Vietnam, Thomson also has clinics and centers located in Ho Chi Minh City and Hanoi. The rising tariffs and trade restrictions between major countries have contributed to a lot of uncertainties in global economies. The effects of this economic slowdown are now being felt across multiple industries, including the healthcare sector, which is traditionally seen as defensive. Are you seeing challenges in terms of costs, perhaps from the supply chain disruptions?
Thanks, Michael. It's certainly been quite an interesting time for healthcare in the last couple of years. I think healthcare is a very highly regulated industry. So how we deal with the regulators, we deal with the rest of the ecosystem of payers, is a very intricate web of interdependence. For Thomson, we are very Southeast Asia focused. We have a hospital in Singapore, as you said, Malaysia, and then Vietnam. Recently, we acquired about 2 years ago. And we're very bullish on the healthcare landscape in Southeast Asia as a whole. At the same time, there has been a lot of shifting sands. I think Myanmar kicked it off in 2021 only with the movement back to military governance. And then there was also changes to governments almost every year. Malaysia, Philippines, followed by, I think, Cambodia, then recently Vietnam, and then now Singapore. And so we see a lot of changes while even regulators move towards, and governments move towards even universal healthcare, capitation models, which actually changes the risk in healthcare from sometimes the patient to the provider. In a patient setting where it's fee for service, the risk is borne on the patient. He goes, whether or not he gets better, he still pays. But in a capitation model, it's the other way around, where if it doesn't get better, you might not get reimbursed. So that is one of the key challenges. Now, in the middle of the decade, 25, you start to see the tariffs. Although as a medical delivery provider, we don't get the first-hand impact, but we do get the secondary impact. Unit costs for manufacturing, who traditionally would have sold to the US, would feel that increase in pressure, and the unit costs would have also impacted us. Currency changes and fluctuation, definitely. For Malaysia, when the ringgit was at its lower last year, we definitely did see that pressure on cost. And sometimes price go up, but it never comes down. So it seems like there's a good reason for the price of products to go up, but it doesn't come down. The other one is sometimes the intricate web of interconnectivity of the supply chain. The day before Liberation Day, we signed an expensive cyber knife system in Vietnam. So this is a US product that was going to be sold to me by a Hong Kong distributor to my Vietnam hospital. So I called him and said, so what's happening now, right? Because you don't know how he's being impacted, whether the price that we have worked on and shook on, can he still deliver? And those are interesting conversations that we have been having in the last couple of months.
Thank you, Dr. Melvin. Maybe also perhaps, can we have your thoughts on mainstream issues that are, with regards to healthcare industry, such as the increasing medical insurance premiums, and of course, arising from that, the resultant call for broader reforms and regulation?
It's a complex web, as I mentioned. Healthcare costs in the region will continue to rise for sure because populations are aging. Vietnam, you once considered a youngish kind of nation, but they would have a reasonable proportion of their population above 65, which then classifies them as an aged population as well. And that is surprising even to me when I look at the ground and I see the average age of people that I'm interacting with on the ground. And that will bring about certain costs because you have the higher expense type of healthcare services being drawn down on. Orthopedic cases will increase because of knee replacement, hip replacements, falls. You have more oncology. And so these are expensive cost pressures. At the same time, medical advancement is not stopping. You will definitely have new advancements, and these advancements don't come cheap. 10 years ago, you wouldn't, before Da Vinci, before robotic prostatectomy, that wasn't the gold standard. Now it is the gold standard for treatment of removing a prostate, which is a radical prostatectomy. The gold standard is by Da Vinci surgical robots and other surgical robots. So you can't run away from that expectation, and it will be very hard for a government, for a hospital, for anyone to say that I will deny my patients the gold standard of care. At the same time, I think the impact of the rising costs because of multi-geography, shifts in currency, in tariffs, that really does impact the payers. Even though the providers and the payers would seem as adversarial, I actually must say that we're in the same bed together. Maybe it depends who gets the bolster one night or the other. But the bed is also shrinking, and we have to make do and work out how we can then deliver value with the amount of constraints that we have. And I think the key to this is an open conversation and clarity rather than mistrust and opacity.
Thank you, Dr. Melvin. I think that's very insightful. I mean, Malaysia's private healthcare scene is also facing similar inflation in medical supplies. And more recently, in an effort to curb medical inflation, the Malaysian government has actually introduced a 10% cap on insurance premium hikes effective January this year until the end of 2026. Now, I have a follow-on question on that afterwards for you. Yeah. Moving across to you, Pak Vincent. Right. Now, FKS Food, it's probably a name that not everyone here may be familiar with. So I'd appreciate if you could share a little bit more about FKS Food after this. But FKS Food is the market leader of extruded snacks and snack noodle under the household brand names of Taro and Mi Kremes. I hope I pronounced that correctly. And FKS Food also occupies the top 2 producers position in Indonesia in the product category of dry noodles and vermicelli. Now, beyond the global trade-related headwinds, we understand that the food industry has its own set of unique complexities with volatility in commodity prices directly having an impact on the cost of your raw materials and eventually moving on into your production costs. We understand that for that 3 of the soft commodity inputs that you use, wheat, corn, and rice, makes up almost 80% of FKS cost of goods sold. Now, how has this recent developments in terms of tariffs and trade, impacted FKS cost competitiveness?
Right. Thank you, Michael. Good morning to everyone. First, let me share a bit about FKS Group. Then we will go to FKS Food. Now, FKS Group, we actually started our business a long time ago, about more than 50 years. Our business are focused mainly on trading. Today, we venture into upstream. We have sugar plantation that is in Brazil. We actually does merchandising across the Southeast Asia and up to Asia region. We handle soya bean meal, sugar that is traded globally also as well. Now, our home base and where we grew up is actually in Indonesia. We focus today in distribution and logistics for soya bean, which is mainly used for tofu and tempeh. Soya bean meal, which is mainly used for the feed mill industry, and we does processing, which is in sugar, wheat flour, cornstarch, sweeteners, and rice flour. So, as what you see over there, we are all in upstream. Now, then we go into processing, and today in FKS Food is our last leg on our farm-to-plate model. So, FKS Food Sejahtera completes our leg. Now, FKS Food Sejahtera previously was known as Tiga Pilar Food Sejahtera. It was a distressed asset in the year of 2018. It went into financial difficulties and it went into the potential of delisting in the stock exchange in Indonesia. We stepped in, we came in as the white knight to save the company and 16,000 public shareholders in the country. All right. Now, when we went in, we did a new capital injection into the company, and then we cleaned up all the books, and we saved the company and also 16,000 shareholders from going into the listing. The challenges was a lot during that time when we did the acquisition. We completed the acquisition in year 2020. Now, all of us know in 2020, we had a very famous name, which hopefully we doesn't have to face it anymore, which is COVID. We were unable to go to the market to sell and distribute back our product to meet our customers, to build back confidence in the market. Then came high commodity prices. The price of corn, wheat went up more than 50%. It was a challenging time. We were not able to grow our business and we went into red very much. Today, as what we see is we're able to turn around. Now, high commodity prices, that was in the past. Today, commodity prices, even with the trade tariffs that's happening globally, it does not affect us significantly. All right, pretty much as we see between the month of January up to today, price of commodity has not actually changed significantly over this period of time. So with that, a lot of initiatives that was done earlier benefited us today. We were able to run into profitability and also grow our market much more significantly, especially in the year 2023-24. Now, saying all these things, I would say, today we run the different challenges in the country. All right, one of our key challenges that we face and what we see today is actually the soft buying power of the Indonesian population. This is mainly attributed from a few factors such as global economic situation, export reduction of our products, all right, therefore causing us to have depreciation in rupiah. Now, at the same time, those are the external factors. Internal factors, we also have in our country itself, the next challenge is we have online gambling and online lending. That is rather rampant in the country. While the government today tried to clean it up, but now a lot of people are indebted to the online lending. So as what we see and what we observe, maybe during their payday, comes payday, 50% of their salary is gone. It pays debt, or they are addicted to online gambling. Right? I think, so these are things that cause the soft buying power of the general population as what we see. Right?
Thank you, Vincent. I was going to ask you what are the other challenges, but I think you have preempted that question. But thank you. I guess considering that these are the products that the FKS manufactures are very much staple food items, it's definitely critical to ensure the affordability for the consumers. Yeah. Jessica, EcoShop is the largest dollar store chain in Malaysia with 349 stores. And EcoShop has a broad product portfolio comprising general merchandise, food, non-food, softline, and other product categories with over 13,000 SKUs per store. Now, how has the recent developments on the external front impacted your business in terms of supply chain? Now, we know that the majority of your end suppliers are based in China. And as a result, consequently, how do you see this affecting the EcoShop's costs and competitiveness?
Good morning, everyone. EcoShop is new kids on the block. We just get listed in 23rd of May. Yeah. But having said that, EcoShop actually has been in the business for more than 2 decades. We are the so-called dollar shop segment market leader. We own 68% of the market share in Malaysia, which is like 5 times largest versus the second largest competitors in Malaysia. Yeah, currently we have 371 outlets. We are hitting to 400 stores very soon. Yeah, so when you come to EcoShop, everything under the roof of EcoShops is 2 ringgit 60 cents. If many of you are coffee lover, so if you pay for a coffee around 15 to 20 ringgits, if you come to the store, our store, you can easily get 5 to 6 items Yeah, so that is ultra affordable, home living and home essential. So coming back to the questions that you asked on the pressure of supply chain side, this is definitely, yeah, given that we are a retailer, supply chain that in these last few years, past few years, you can see a lot of the volatile landscape. Yeah, the pressure and the spike of the cost, and also the restrictions pressure from the external as well. But having said that, yeah, eco shops has a business model is very based on the scale. Yeah, scale. Volume is the key for our business. So with the scale that we have, when come to the procurement part, right, we are able, to go direct to the factory and secure directly from the factory. Yeah, and majority of our products, EcoShop has about 29 house brand. Yeah, so that is very important. Constantly that we look at the way that we bring down the cost structure, yeah, for the products on the supply chain side, that we cut out most of the middleman person, yeah, so that able to give us the operation efficiency. On top of that, if you will look at the procurement part, on the processes, I think centralized processes is very important. Yeah, that you are able to keep your fixed costs in a very minimum, and we have a very lean and structured team behind to, face all these challenges on time. Yeah, so that is very important, that company must have a very good discipline. Yeah, especially that when in this type of tough situations.
Thank you. So Jessica, sorry, since you are the new kid on the block, I'm going to ask you more questions. Yeah. So, is EcoShop going to be a beneficiary if trade tension escalates between US and China, considering that, you're negotiating directly with the manufacturers and the suppliers, right? How do you see that panning out?
At this point of time, we don't see any major impact, yeah, for us right now, because that our product is not impacted by the US tariff. We have 900 over suppliers. We have quite a diverse portfolio of suppliers. I think that, again, is like how we manage this part of it. So far, we don't see any big impact, but in fact, we felt that this could be a beneficiary to us when the China suppliers, they are not able to export to US. This will give us more opportunity. Definitely, they would like to look for new markets, especially in the Southeast Asia, where there is a growing middle incomes, and also that the customer looking for value for money and qualities. So definitely, I think that will be an advantage to us rather than a threat to us.
So, thank you. One more question for you, Jessica. Since you're the only lady on our panel, so giving you a little bit more attention. Now, labor costs is also a big part of the cost structure. With higher minimum wage this year and the 2% employers' contribution to the EPF for foreign workers that's going to start in October this year. Now, how do you see this potentially impacting the retail industry? How do you see this affecting EcoShop?
I guess that as a business, we have to always prepare with this type of pressure. Definitely that the manpower cost, right, is one of the main component in the business. We have about like 9,000 staff. Yeah, but out of that 9,000, 6,000 of them are at the front line. So in fact that we are very supportive of this initiative, of this increase. Majority of them are under the basic minimum wages, yeah. So with this, will help also in line with the company missions, right, to make life easier for the B40 group of people, right? And we look at it, this is an opportunity for the company, in fact, to motivate, the staff of this layer to improve their quality of life, right? Like the minimum wages was announced, started in February, from 2005 to 2007, right? For EcoShop, our site, we take this opportunity to increase to 2008. So we believe that continuing investing in the people, because the people is the main driving force for the business. So with this, not just only in terms of the reward part, I think that the development or the educational part of them, to improve, and as well as that the opportunity. So we felt that this is a very good exercise, continuing to bring development to the bottom pyramids of our workforce. In fact, I think we are more supportive on this part.
Thank you, Jessica. It's very heartening to hear, about how you look at, taking care of your employees as well. Not just about taking care of margins, but also taking care of the people.
Yeah, when they are motivated, the productivity will go up. So that is where your paybacks, you will see the paybacks, like what we have discussed this morning about return on investment. So human resource is one of the area that I think is even more important when we are facing the business expansions.
Thank you. So moving on from headwinds, let's talk about opportunities in your respective business and industries. Right. Coming back to you, Dr. Melvin. ASEAN's evolving demographics and lifestyle is driving changes in the healthcare sector. ASEAN has a population of 700 million, and it's with an increasing working age population, as well as obviously an increasing elderly population. Life expectancy in Southeast Asia, is expected to surpass other regions in Asia. Consequently, as you mentioned just now, healthcare spending can only rise in tandem as medical services improve and catch up with the average spending rate of developed countries. What are the opportunities for private healthcare operators like TMG? Do you see it in areas such as medical tourism, or do you see it in higher value electives, for example, specialized treatments for cancer and cardiovascular diseases?
Thanks for that question, Michael. The opportunities in healthcare is always there. I was just commenting to you, I feel very nervous speaking to a group of healthcare experts in front of me. Everyone is a healthcare expert because everyone has engaged with healthcare at some point of time in their life. Everyone has opinions. Sometimes I hesitate to tell people I'm a doctor in a cocktail party because I get a lot of questions about my scope, What we see, the trends that we find that is very beneficial towards the healthcare sector is really the investment in a lot of interest in aging actively, being able to stay resilient, being able to extend health span, being able to be healthier for a longer period of time, and also in the wellness preventative sector. There are a lot of parts of healthcare that, to the doctors is still at the fringe when you talk about wellness, preventative treatment. And as a company, we also earnestly look into these kind of models, whether it's, Vital Life in Bumrungrad, where they look at hyperbaric and they look at supplements and they look at building up better wellness and resilience, health resilience, to even looking at entire villages. We have a 11-hectare piece of land in Johor as well, and we are taking a view on that, in how, facilities can be more purpose-built to give independence, at the same time provide safety for people who are then moving into a more aging segment. We have seen innovation in terms of these these developments that actually have very well linked accessibility to the nearby hospitals, even linking the emergency pool cords in the toilets to the hospital A&E. So I think that area has been a huge area of interest and growth. At the same time, it is even the models of payment are also being assessed. I mean, we see different models in Australia where people maybe reverse mortgage, and then that goes into something that they can they can engage with. And so these are definitely areas that are emerging. Of course, we will see the normal investments in chronic disease, cardiovascular disease, is also a disease of emergence and developed countries. Oncology services is now even more prevalent because a lot of cancers, people don't die of cancer, they continue to live with it. Actually, my wife is an oncologist, and she remarked, sometimes now cancer is a chronic disease because you don't die from it, but you still get treated and you can have life extension for quite long. So I think these long tail causes a lot more hidden, unexpected costs when you look at total spending in a country for healthcare. The other thing is the patient demand and regulator demand and even payer demand. I think the need for information, the need for continuity of care is becoming higher. And therefore, providers like ourselves need to be able to provide that transparency without having to kill ourselves in the process, the manpower and the manual extraction of data. So investment in data systems, in ability to continuously engage the patient or our clients throughout their journey, being able to put forth medical services that they would want to engage or they would want to look for. I think that is something that is also an area of interest and challenge. And I think every country is going through that process of building nationalized healthcare networks electronically. Thank you.
Thank you. Thank you, Dr. Melvin. Maybe I'd like to ask you, so what are your thoughts? There's a conversation going on now about pension funds being used to pay for healthcare insurance premiums, and as a healthcare provider, I was just hoping to get a view from you on how this would work out.
I want to answer it carefully because I want to be invited back again. I think every country decides how much proportion they can treat in the public sector and how much gets treated in the private sector. The Ministry of Health would probably have a budget that meets let's say 70-30, 70% is treated by the public sector, and then that budget is devoted to that. The 30%, they might want to subcontract it out to the private sector, and that's either fee-for-service by the patients or either payer models that the insurance company, which is regulated by a different non-MOH, which is Bank Negara, would then kind of give them the licensing to underwrite healthcare insurance and then pay out. So there's a free market force on one end, and then there's the public sector on one end. So that balance is extremely critical, because if you start to have a lot of shift from the private sector back into the public sector, then you get an overburden of the public sector, and then that's when things get difficult, because what you have budgeted just doesn't work out. I think having forced savings for an entire population is extremely is a good kind of a source of resilience, because it then gives the ability for the individual to be in control of their healthcare needs. And therefore, being able to keep that layer of resilience is probably important. To expand that layer of resilience by then allowing that portion of money to be then risk pooled in an insurance product is an interesting perspective. But that's, of course, with a lot of calculation, whether that amount of money is able to cover the product that you're trying to construct. If not, it becomes, I'm not sure if you achieve what you want to achieve in that process. But whichever way, I think it's a good move to actually increase the potential of that pool. What I notice or what we see is that sometimes putting liquidity in a healthcare environment doesn't actually reduce the out-of-pocket costs of the patient significantly. That is interesting because we've seen that done in Singapore before as well, where we give more liquidity for assistance. It actually changes the health-seeking behavior of the person. And that, in turn, actually increases healthcare utilization, which might not actually reduce their out-of-pocket expense. So it does change your whole behavior and environment again. So sometimes just giving pure liquidity out is not the solution. Something needs to be more controlled.
Thank you. I think you'll still be able to come back, Dr. Melvin.
Thank you.
Okay, moving back to Vincent on opportunities, right? So Vincent, you mentioned just now that FKS market share. Sorry, you mentioned earlier on FKS Foods market share in the consumer business segments. Now, after the revamp that's taken place over the last 4 years since you've taken over, FKS Food has begun to expand its point of sales again, right? And you're targeting something like 120,000 active outlets by the end of this year. That's what we understand. Now, given, again, that you mentioned just now, you mentioned about soft buying power. I think we prefer to use, evolving buying power, right? Evolving buying power dynamics in Indonesia's mass market segment. Can you share how FKS Food is innovating or driving product innovation, and how are you differentiating yourself to stand out and capture those growth opportunities in what is obviously a very competitive landscape in Indonesia, in your snack and dried noodle market?
Right. Thank you, Michael. I think first, maybe let me just explain. I think some of the jargons that we use, sometimes we say active outlets. I think so. In the FMCG segment, we call it active outlets, are the outlets that basically carries our product, or the retail stores that carry our products. So now, I think what Michael was sharing just now, I think where we are today, about 100 to going to 120,000 active outlets. I'll be frank, I think in terms of the numbers that we have, it's still rather low. All right, our fellow peers and competitors, they run into the likes of 300 to 500,000 active outlets where the products are actually being displayed and being sold in the market. Now, what actually happened, I shared just now, this is a distressed turnaround asset, all right, from a distressed situation going back into a positive situation. During the distress time where the company was facing challenges kind of thing, the active outlet before that was about 200, 300,000, and it dropped to about maybe below even 100,000. Now, with that happening, I think one of the key challenges for us is how to come back into the market post our acquisition. On top of that, one of the key challenges during that time was COVID. We were not able to go to the market. We cannot meet people. And we have to work with Zoom, we have to work with data, we have to work with historical and current data. Now, when that happened, one of the key things is how to come back in the market, and the cost of coming back into the market was rather quite expensive. You have to do a lot of promotion, you have to convince the customers. Convincing customers is like, I will deliver to you, I'll make sure the product reach your store. It is one thing only, but it's like, what is the incentive for me to take, all right? So we had to invest in all those things to make sure that the market believe in us, And over time, it continues to build up, and then we were able to build relationship with the customer and convince them this is the product is of good quality, and it will reach them on time. Now, with that big workaround during those era, today what we see, for example, taro. All right, I think, for example, one of our key brand is taro, which is a snack. We today are able to grow that product more than about 50% of what the sales was previously versus today. We did it more than 50% grow. But during the initial days, the cost of coming back, the cost of convincing consumer was rather quite expensive. However, with that being stable up, we grew by more than 50%. The cost started to come down. All right. Now, with that happening, we see what is the next level for these products. We believe that with all these things, okay, good. Can we go further? Can we do different things? We have identified different potential, different opportunities. For example, today you run promotion. If you reach a certain level, you will run on above the line. You do commercials, you do more digital advertising. It's good to do those, but if your product is not available, there's not enough active outlet, the money will not be well spent. All right, so I think those is what are the things that we have built over the time and what we want to do, again, in terms of building our active outlets. All right, with regards to the next question on soft buying power or evolving, right, what Michael said. Yeah. Now, when the market evolves, all right, we also have to evolve. Interestingly, the consumer segment, I would say, I come from a background of commodities, poultry. Now, when we go into consumer, it's a different thing altogether. Understanding what the consumer wants, sometimes on top of that, educating what the consumer to believe. Right? I think we have experienced some of the things, is like, for example, water. When we say water, it's just water, but we learn over time, sometimes consumer company, they educate, this water have this certain type of minerals. It convinces them, and you tell them, oh, you feel this sweetness. That helps, actually. Now, to address on the soft buying power, all right, we have to change, we have to evolve also to suit the consumer. Now, with this current situation that's happening in the country, consumers has become more sensitive. What they want is better value in terms of the product. Bigger, it ranges again different things. Some would want it smaller pack because their income is able to serve only at a certain sizes. Some would want to buy massive, bigger, so then they can serve the whole household. Interestingly, with times changing, all right, I think at one point in time, all of us love to eat outside. But with times changing, situation changing, economic situation changing, a lot of what we are observing in the market is a lot of people are going back to cook in the house. All right, that is what we are seeing. So we have to prepare products that is able to serve the household. We also have to prepare products that's able to serve individuals. So our SKU ranges has to meet the demands of the consumers. Right? When it goes to B2B, it also runs differently. The HoReCa, they runs differently. As usual, cost competitiveness, all right, and whether the texture fit into their the restaurant, or it makes the chef happy when they try the product. Now, these are the people that we have to be very sensitive and for us to be able to educate them also as well. It's not only about selling, pushing the product, but sometimes educating the consumers is what we have to do, and that's where our marketing courses actually picks up.
Thank you, Vincent. Now, I know that FKS Food's focus is currently Indonesia, but are there any plans to expand your product reach to outside of Indonesia?
All right, I think our key priority still remains in Indonesia. All right, I think it's a very big market with a population size of 250 million. All right, 17,000 islands, 300 ethnic groups. There's a lot of opportunities which we have not tapped in the country. Right? Like I shared basically, for example, in terms of geographical, Java Island itself has about 60% of the Indonesian population concentrated there. All right. Today, our market coverage in Indonesia is also still Java. All right. Mainly, more than 50% of sales are focused in Java. Then it goes into Sumatra and Kalimantan. Now, this will be the first thing that we will want to focus. A lot of potential, a lot untapped, and a lot of opportunity to develop different products from the local delicacies to be marketed to the consumer. With regards to export and international markets, yes, we would love to explore. Today, some of our products are actually exported into overseas. They are in Netherlands, they are in Australia, America. Right? However, I would say it's not the key priority, but it's something that we are working on. For example, we have FKS Group, we have offices that is across Southeast Asia. We have also in China. So we try to tap on our offices that is globally to market our product. The only difference is our background is in commodity. This background is different, is in food and consumer. Now, we use our offices to handle the logistic, but we will parachute our people in the food industry to go down there and to work with the team to build the product.
Thank you, Pak Vincent. I'm going to move across to Jessica. So Jessica, I mean, congratulations on your IPO, you mentioned just now, and it is the largest listing on Bursa Malaysia this year with a current market cap of 7.2 billion after raising almost 400 million ringgit from the IPO. Now that's a very nice war chest to have in these times. Right?
Thank you.
So aside from new store expansions, which we know that you're doing something like 70 stores a year, and of course, you know, you're expanding distribution centers. Is the group looking at expansion across ASEAN?
That is a good question. For now, that we would like to really focus in the Malaysian market first, because there is a lot of untapped, white space for EcoShop to expand, right? To continue our missions to modernize the retail markets landscape in Malaysia. This is definitely look at the total populations, right? That we are in a growing stage, and our store is only 300 over stores, right? So there is a big room for expansions for EcoShops. So we definitely have to get ourselves ready in terms of the infrastructure as well as the for the business expansions, right? The backbones like the warehousing. On the expansion on overseas, when the timing comes, we will do the evaluations. Because if you look at it, that in the matured country like US, Canada, as well as Japan, the dollar shop segment play a very important role, like 100 yen store, as well as the dollar store in US. But however, that in these Southeast Asia markets, you don't really see many of them. You have a lot of discounted store, but the business model that EcoShop have is slightly different. Yeah, we are really ultra affordable, and the mixed component of the product offering, it's not just only on the general merchandising, but the essential of the food part is very important. So I think for us, a lot of opportunity. Hopefully that in the very near future, we are able to move a little bit faster on this part, on the expansions. Not just only being the first company that in the dollar shop listed in Malaysia, but we hope to bring this Malaysian homegrown brand into the international level.
All right, so watch out for EcoShop across the region. Thank you, Jessica. Okay, we're coming close to the end of our session. One last question perhaps for Dr. Melvin. So Dr. Melvin, TMG now currently has 790 beds, almost half of them in Malaysia, and then pretty much equally split between Vietnam and Singapore. You have previously in your results sessions, highlighted to investors that regional expansion remains a core pillar for Thomson. Can you share with us your plans, TMG's plans to further expand its presence? Is it just Singapore, Malaysia, and Vietnam, or are you looking in other parts of ASEAN?
So when I joined Thomson Medical Group about 2.5 years ago, we did look at we took a view on the region. We actually had open conversations with almost every country, Myanmar, Cambodia, Papua as well, in fact, and Indonesia. We looked at the places that we narrowed down where maybe we could put another Thomson other than Singapore and Malaysia was Thailand, Vietnam, Indonesia, maybe Philippines as well. We landed on Vietnam during that time because there was an opportunity. And we were glad that we took that opportunity to expand into another geography. Within Malaysia, there were lots of opportunities for sure, with recent sale of Ramsay Sime Darby's hospital group and Ireland as well for pretty dizzying valuations. I've always looked at trying to solve for an opportunity in Indonesia, and also we also see a lot of inbound medical tourism from Philippines, signaling that the market is actually probably ripe for more expansion. And I think solving for these issues or these opportunities to get in is number one is opportunistic for us, and also sometimes it's the right partner, right place, right time. There are different factors in different markets. Let's say you will always want to solve for the patient flow. So in Philippines, you will work with one of the health management organizations, the HMOs, which are very key to patient traffic and patient movement. In Indonesia, there's a lot of baseline work that you need to do with the various families, also the constant negotiation and conversation with the Indonesian Medical Council, the doctors as well, and trying to solve for actually even more foundational issues that will cause friction. I'll give you an example. If you wanted to do cancer services in a city or a country, you could get good cancer doctors, you could get good facilities, and then you think, I need a PET scanner because I need to screen them yearly for follow-ups. And then you get a PET scanner, and then you realize, I need nuclear material to run my PET scanner, so you need a cyclotron. And then not that many cities would have abundance of cyclotrons, so you might run out of nuclear material. KL has 4, I think. Singapore has 4. And Indonesia, I think there still needs to be more infrastructure in that. So sometimes that needs to catch up, and it's not so quick for things to catch up. They need to come at the right time, so that when you enter the market, you can run your services without disruption. In fact, I just think that in south of Vietnam, we had some shortage issues with nuclear material just last week for the cyclotron in South Vietnam. And we were thinking, how are we going to move our patients from Vietnam to Malaysia or Singapore for scans, right? So I think these are the things that we think about when we enter a country. The ability to pay, the willingness to pay at the right premium, and also the services that, the ecosystem that provides that support.
Thank you. I think it's time to wrap up our session. We're out of time. In closing, I'd like to say a big thank you to our panelists for the very insightful sharing. We all leave inspired by the opportunities that lie ahead. Thank you, everyone, and enjoy the rest of the event today. Thank you.
Thank you very much for your candor and also for covering a varied range of sectors to kick the day off with. Thank you very much, ladies and gentlemen.